Why is SGD so strong? The Swissification of the Singapore dollar. Why is the Singapore dollar becoming one of the world's strongest and safest currencies? Why is it being compared to the Swiss franc? Let's break down the Swissification of the Singapore dollar. For years, the Swiss franc was the king of safe haven currencies. But now the Singapore dollar is acting the same way, rising or staying stable when global markets panic. New data shows a growing correlation between the SGD and the Swiss franc. Investors now view Singapore's currency as a safe and dependable asset. One major reason is Singapore's powerful external financial position. The country owns far more foreign assets than liabilities, giving it a huge protective cushion. As global companies move their capital to Singapore, the demand for SGD keeps rising. This constant inflow strengthens the currency further. The Monetary Authority of Singapore uses a rare and disciplined exchange rate policy. This keeps the SGD stable and predictable, something investors trust deeply. Just like Switzerland, Singapore now offers a strong credit rating, deep financial markets, and political stability. This is why analysts call it Asia's Switzerland. In times of uncertainty, investors search for safety, and they're turning to Singapore. This rising demand pushes the SGD even higher. If current trends continue, the Singapore dollar may become Asia's most trusted safe haven currency, just like the Swiss franc. The Swissification of the Singapore dollar is not temporary. It is shaping a powerful new financial reality.